What's up guys? Today I'm going to share my top 5 stocks to buy in the month of September 2021. I spent hours of research going over many different companies and I found a few that I believe to have huge growth potential. Be sure to watch this video all the way through as I'll be giving my analysis on each of these stocks and I'll be covering relevant news, significant numbers, price action of the stock, and my predictions. I want you all to have balanced portfolios, so I've included a good mix of stocks that are safe picks as well as riskier stocks that have potential to run up massively. As a reminder, this video is for entertainment purposes only, and before we get started, go ahead and hit that like button and subscribe if you haven't already, and don't forget to turn on your notification bell so that you won't miss any time-sensitive content such as this video. So without further ado, let's get into my top 5 stocks for September. Alright, so my first stock is Farfetch, or ticker FTCH. Farfetch is an e-commerce marketplace for designer brands around the world. It currently ships to 190 countries and is one of the biggest single-platform websites that carries over 1,300 luxury brands. The company started in 2008 but has only recently IPO'd in 2018. Coming over to the balance sheet, Farfetch isn't currently profitable, so what we would look for next is revenue growth to see how fast the business is growing. When a company doesn't make profits, we generally expect to see good year-over-year growth in total revenue. That's because it's hard to be confident a company will be sustainable if revenue growth is negligible, and it never makes a profit. From 2019 to 2020, Farfetch grew its revenue from $1 billion to $1.6 billion, representing an increase of 60%. Let's look at the margin, which can be calculated by dividing gross profit by total revenue. Now, if you remember my video on how to assess a company by looking at their financials, you'll know that margin is an indicator of profitability. Now, if you haven't already, make sure to check out the video where I break down the most important numbers to look for to determine how solid a company is. But pretty much, we're looking for a margin of greater than 40%, and what this shows us is that the more a company sells of its product, the more profitable it will be over time. Looking at the margin of Farfetch in 2019, we can see that it was 46%, or the gross profit of $460 million divided by $1 billion. 2020 was the same story where Farfetch posted a margin of 46% again. Let's jump over to a key stat next. Looking first at the beta, we see that it's 3.3. Remember, this is an indicator of volatility and that a value of 1 is equal to the stock market, while any value greater than 1 indicates higher volatility in comparison to the markets. This means that while Farfetch is a riskier stock, it has extremely high growth potential, especially in a bull market. Now let's look at its price action on the charts. Coming over to the monthly chart, we can see that it rallied up from $6 in April last year to its high of $74 in February. It has been on a decline since then, but this could represent an amazing buying opportunity given the discounted price of the stock. It has created a massive bull flag on the monthly chart, which is a very bullish sign. And just FYI, I'll be creating a video on chart patterns such as bull flags in a coming video, so stay tuned for it. Over on the daily chart of Farfetch, we can see that it's hovering around the 200-day moving average, which represents a great buy-in opportunity. Looking at the RSI, we're currently sitting at near oversold levels, which is another buying indicator. So what price target do analysts have for Farfetch? Analysts are rating it as a moderate buy with an average price target of $59, which represents a 47% increase from its current price of the stock at $40. In addition to a strong institutional ownership of 96%, as well as news of Cathie Wood's recently adding a sizable position of Farfetch to her portfolio, all the indicators are pointing to massive gains for this stock in the coming months. For those of you with small account sizes, this is a perfect stock to enter now and hold for the long term. You can buy shares of Farfetch on Webull, and if you don't have it already, head on down to the description below and get 2 free shares of stock when you open up a new account. Alright, so next on the list is ROKU, or ticker ROKU. I'm willing to bet that most of you have heard of this company before, as it is a small square device that connects to your TV and allows you to stream free and paid video content on your TV with just an internet connection. ROKU enables you to download popular streaming services such as Netflix, Hulu, Amazon Prime onto their devices so that you can watch all of your favorite shows in one place. Heading over to relevant news, we see that ROKU has been making moves in terms of broadening its target audience. Earlier in the month, we saw that ROKU partnered with El Rey Network to launch an entertainment network catering to Latin populations. Days later, they announced the addition of 16 additional free streaming channels. Coming over to the income statement, we see that ROKU has strong year-over-year growth with a solid increase in profit every year. Staying on the income statement, we're going to look at the margin of ROKU. Now, if you remember in my video on how to assess a company like a Wall Street investor, you'll remember that margin is calculated by taking the gross profit and dividing it by the total revenue. High margin shows us that a company will become more profitable the more it sells. In the case of ROKU, we can see that it had a margin of 39% in 2017, 45% in 2018, 44% in 2019, and 45% in 2020. Since we're looking for a margin of at least 40%, we can tell that ROKU will become more profitable the more products it sells. Next, we're going to take a look at the cash flow tab to see ROKU's operating cash flow. Remember that this answers the question of whether a company is generating real cash or if it is generating cash by borrowing or selling its stock. To find this, we'll subtract capital expenditure from the operating cash flow to get a figure which is free free cash and is the amount of cash that is available for the company to either pocket or reinvest. In 2019, we saw that Roku was not generating real cash. Instead, it had a negative balance of $71 billion. However, we love to see that in 2020, they had $66 billion left over in cash to reinvest in the company. Now, coming over to the stats, we see that Roku has a PB of 18. In general, we like to see PBs under 10, but it would be worth trending the PB to see if it dips near undervalued territory. Roku has an EV to EBITDA of 146, which means that the company is valued at 146 for every dollar of earning before interest, taxes, depreciation, and amortization. Not a great value, but it indicates that Roku is potentially overvalued, but we'll be watching it as well as the PB. Looking at the beta, we see that it has a value of 1.76, which indicates that it is more volatile in comparison to the general market. In market pullbacks, we see that high beta stocks typically do worse in the market, while they tend to overperform in a bull market. If you can catch Roku near the bottom, or if you have enough cash to average down in your position, then you will come out of this investment wildly profitable. But let's look at the charts to see if it is near a significant support level. Coming over to the daily chart of Roku, it's currently sitting at the 200 EMA on the daily and is at the bottom of its channel. It has been on a major slide since the end of July, but we recently saw a doji at the bottom of its downtrend with a green hammer candle, which is a bullish sign. The last time Roku touched the 200 EMA, it rocketed up by almost 100%. In addition, the RSI just bounced off oversold levels and we are seeing the MACD curl up. Now the stock market can do whatever it wants to do. With the seasonality of the markets being on a downtrend, we can definitely see Roku fall a little more. I'm seeing a significant level of support around $323, so this could be a good opportunity to average down if you decide to enter a position now, or you could look to set this level as your stop loss. Analysts have Roku as a strong buy with average price target of $502 and a high target of $650. Roku has taken an absolute beating this past month, and based on the technicals flashing multiple buy signals as well as strong fundamentals, Roku could be one of those stocks that absolutely blows up in the near term. Although I'd hate for this to happen, look for catalysts such as increased COVID restrictions or another shutdown, which will mean more people at home with more time on their hands, which leads me to believe that there could be an increase in demand for Roku streaming services. Remember to have a plan on when to enter and exit your positions, and as always, make sure to do your own homework before investing your hard-earned money. Next up on our list is Activision, or ticker ATVI. They make a ton of video games for both your phone and game consoles. However, they've been getting a lot of bad press recently, which has resulted in a drop in price. On July 20th, Activision Blizzard had a lawsuit filed against them regarding sexual harassment and discrimination allegations. Hundreds of employees staged a walkout, an open letter signed by thousands of employees demanded immediate changes, and some investors filed a class action lawsuit against the company. However, with changes to company leadership at the beginning of August, as well as a lifted outlook for 2021, we may be seeing it close to its bottom. In game spending in the second quarter of 2021, it was over 4 times the level from the second quarter in 2019, while audience size was 3 times higher. Looking ahead, Activision is expecting a strong second half of the year and a new Call of Duty game set to release in November, as well as expected content updates for World of Warcraft, Diablo, and Candy Crush should propel this company back to previous highs within the next few months. Looking at the income statement, we can see strong revenue growth that totaled $8 trillion in 2020. Astoundingly, they have a 72% profit margin for 2020, followed by a 68% profit margin in 2019. Coming over to the cash flow in 2020, ATVI had over $2.1 trillion in free cash. This is an insane figure as it represents the amount of cash that can be reinvested in the company. Coming over to the stats, we can see that ATVI has an insanely attractive PB of 3.8, which shows that it is undervalued. EV to EBITDA is sitting at 16, and ideally we would like to see an EV to EBITDA of 10 or under, but it is still relatively close. It has a beta of 0.59, which means that it is less volatile than the market and a great long-term hold. Let's take a look at the charts to see where we can make our entry on ATVI. Looking at the daily chart, we can see that ATVI created 2 channels, with the first channel being in purple and the second in red. At the end of July, when the negative press surfaced, ATVI dropped from its second channel and fell below the 200-day EMA. We can see that here price action bounced off of the bottom of its original channel, as well as a strong support on the daily chart at $77. I already started building my position at $77 to $80, but we'll look to add more with either a bounce off of the bottom of its original channel or a confirmed break of $83. Now, experts are rating Activision Blizzard as a strong buy with an average price target of $114 and a high of $125. Wow, what a stock. Extremely strong fundamentals, a discounted price sitting near strong levels of support, and a price target average of $30 above current prices, and we have got ourselves a winner. Make sure to average into your position or wait for price action to fall to key support levels. Next up is PayPal, or ticker PYPL. Many of you probably use this online payment system pretty frequently, but for those of you unfamiliar with the company, they offer a safe and secure method for sending and receiving money. They've been getting a lot of positive press recently, so let's dive into the news. Just days ago, PayPal announced that they will let users in the UK buy, hold, and sell cryptocurrency. They allow for crypto purchases through a bank account or credit card. This is a massive move considering noting that the UK is not only a fintech hub, but that it is PayPal's second largest market globally. In addition, PayPal's venture capital arm recently made investments in blockchain and crypto, including $14 million in TRM Labs, a crypto risk management software, $40 million in Talos, a digital asset trading company, and $100 million in TaxBit, which is a crypto tax software company. Coming over to the income statement, we're seeing massive year-over-year increases in total revenue, with revenue exceeding $21 billion in 2020. In the past 4 years, starting in 2017, we're seeing profit margins of 59, 46, 45, and 46%, all above our sweet spot of 40%. Looking at cash flow, we're seeing a free cash value of just under $5 billion, which can be reinvested in the company. Coming over to the stats, we see that PayPal has an attractive PB of 15, while its EV to EBITDA is sitting at around 48. It also has a beta of 1.15. Don't forget that PayPal has a $300 billion market cap, and this stock has literally 10x'd in the past several years. Looking at the daily chart for PayPal, we see that it has recently fallen out of its channel and is looking to find an area of support around the $270 range. It has a gap to fill from 289 to 296. If the 5E can cross the 20, we could see a golden cross formation that would confirm a breakout to the upside. In addition, RSI is pointing up and the MACD appears to be crossing over. Analysts have PayPal as a strong buy with an average target price of $336 and a high of $375. Interestingly, this price target of $375 represents the top of the channel that price action just fell from. This is why charting is so important, and if you haven't already, don't forget to watch part 1 and 2 of support and resistance. I'd be looking to scale into a long-term position with a price target at the top of the channel. As always, don't be greedy, and if you're day trading the stock, look to nab your 10 to 20%, and if you have a longer term trajectory, look at taking profits anywhere between 30 and 50%. Also look for indicators that may suggest further movements to the downside, and don't worry, I'll be talking about chart patterns and candles in coming videos. So jumping into my last high growth stock pick for September, we're going to take a look at SolarEdge Technologies, or ticker symbol SEDG. They do semiconductors and photovoltaic or PV inverters that make for more efficient harvesting of solar power. With the direction of global initiatives heading to harvest more green energy, solar power could be that emerging industry that takes off within a matter of years. Couple that with incentives being handed out by local governments to harness solar power, and we have a potential powerhouse on our hands. Looking at the income statement of SolarEdge, we are seeing solid revenue growth year over year, with revenue just under $1.5 billion in 2020. With a profit margin of 31%, we're looking at a company with more room to grow. Coming over to cash flow, we see that SolarEdge is sitting at roughly $96 billion in free cash in 2020 that's available to reinvest in the company. SolarEdge has an attractive PB of 12, an EV to EBITDA of 69, and a beta of 0.93. Looking at the charts, we see that SEDG is respecting the top of its original channel and using it as a newfound support. In mid-June, it broke out of its downtrend that it had been in since January, and then in July, price action came down to test this previous resistance line and acted as support. In addition, it is currently sitting at an attractive price just above the 200 EMA. The MACD looks primed to cross over, and a golden cross formation could indicate continued price movement up. Analysts rate SolarEdge as a moderate buy with an average price target of 319 and a high of 373. As always, remember not to go full position and keep some cash on hand in case you need to average down. So those are my top 5 stocks for the month of September. As always, remember to do your own due diligence on the stocks that I mentioned here. These are simply my recommendations based on my research and are in no way financial advice. If you haven't signed up for a Webull account already, go ahead and click on the link in the description below to claim your 2 free stocks. Ultimately, it's a win-win because you'll not only be supporting me and enabling me to create more videos like this for you, but you'll also get a free share of stock as well. If you haven't already done so, please smash that like button and subscribe to the channel, and don't forget to hit that bell to get notified when I post a new video. I make weekly videos on all things stocks, and my goal is to help each of you to achieve financial success through the stock market. Anyways, thanks guys for watching, and I look forward to seeing you all in the next video. Peace.